What's happening, y'all? Sunday swing trade setup. Just like we do every Sunday, I'm gonna go over some stock market swing trade education and give y'all a free swing trade setup play. Just like I always do. I'm sorry I couldn't do swing trade Sunday setup last week, but we gonna go 2 weeks ago, see the play that I called and see how that performed. And then, of course, I'm gonna show y'all the overall feel for the market. And then I'm gonna give y'all some free game on this upcoming week. Now, we do have earnings coming up this week. It is very risky to swing trade earnings, but if you want to take that risk and get big profits, because on earnings, you know what I'm saying, it's gonna make a big move in either or direction. So I'm gonna give you a stock to look out for if you want to take that risk and swing trade earnings play. So let's get into it. So let's go back to my swing trade from 2 weeks ago. See what I was talking about. Out of the Bollinger Band, right? So that's the first reason why I like Tesla, right? So we're outside of the Bollinger Band on the bottom, which means there's only room to go up, right? The RSI, which is the top indicator down here, as you can see under the chart, I got three indicators. The RSI, which is the first one at the top, that one is outside of the Bollinger Band. Now, it's not 100% oversold, but I use the Bollinger Band on the RSI to I. All right, so look like 2 weeks ago, the play was Tesla. So let's put up, let's see what Tesla did 2 weeks ago. Let's pull up Tesla. All right, so let's see if y'all can see this. All right, so I called Tesla, and it looks like Tesla did go up. Since I made that call, Tesla did go up for like the next 2 days. Because I made that call where you can see, where in the video where I called the divergence, right where that last candle is. So the next two, even three, even four candles all ended higher. So that would have been a win if you just held it for a little bit. But if you would have held it even longer into this week, Tesla is really up. So that's another thing I want y'all to do. If you can hold your trades longer, usually my swing trades are probably, just for a week time frame. Like if I get it on Monday, it expires on Friday. But if you would have did this swing trade, a 2 week swing trade for Tesla, you would have got a little bit of profit here because it did go up for the next couple of days. Probably would have scared you because you would have ended lower than your entry. You know what I'm saying, last week. But just these 2 days alone, you know what I'm saying, would have made up for it. Would have been big gains on the profit. So the stock is higher than when I called it. Last swing trade set up. So we gonna call that a win. We good to go on that one. As y'all can see, every time I hit y'all with something, it go in the direction that I feel like it's gonna go. Now this week I got some prospects. The last one I give you is gonna be the best one. That's gonna be the one that I feel is like a guaranteed to hit. But I'm gonna give y'all some ideas and some trading, something to consider or at least watch out for before I hit you with the last one. So let's go ahead. Let's look at this fear and greed index real quick. Let's see how people are feeling about the market. All right, so we are greedy. We're greedy. Looks like a week ago we were even more greedy. So, of course, the stock market, these past week or two, kind of made a little pullback. It's going down, And in my opinion, I feel like it did that because a new earnings season was coming up, and a lot of these stocks are about to jump up pretty big, after reporting earnings. So I think we had a nice pullback to set up for the shoot up for earnings. We're not extremely greedy. I feel like we will go in the greedy direction, but that's just based off of fear and greed. Let's look at VTI, the total stock market, and get a real idea of what's happening. Because fear and greed index ain't, at the end of the day, it ain't, you know what I'm saying? It's just telling you how people feeling. It ain't nothing to really trade off of. So VTI, let's look at the whole stock market. So the total stock market index, I see a divergence. So it looked like the total stock market, in my opinion, it's been going up, and it looks like it's going to continue to go up. So it's not, maybe it's a divergence. Y'all let me know. Y'all let me know if y'all consider this a divergence or not. But and if you haven't watched Swing Trade Sunday or don't know what a divergence is, a divergence is when the stock is making higher lows and the indicators are making lower lows. It's not really a divergence on the RSI, but I'm seeing a divergence here on my MACD, and I'm also seeing a divergence here on the stochastic. So the trend is your friend. The stock market is trending in an upward direction, but it also has a little divergence, and we're close to oversold, according to the Bollinger Band on the RSI. So, in my opinion, I feel like next week the stock market is going to head in an upward direction. A lot of companies are reporting earnings, so I think the stock market is going to go in the upward direction. So, now that we know which direction we feel like the market is going to go, I'm going to give y'all some plays to kind of look at as possibilities. And then I'm going to go, the last one I do is going to be the one that I really like the most, almost guaranteed to make you some profit next week. All right, so I'm going to start off with Google. Let's look at Google, and I'm going to show you why I'm feeling Google. All right, so let me make sure y'all can see this. All right, so we got Google, aka Alphabet. So I'm feeling Google for multiple reasons. One is because it's above all of the moving averages. And the moving average, they play as support and resistance. If the stock is above the moving averages, that's a bullish sign and all of that. So it's above the moving average, which means there's no moving average above it to knock it back down. Now, moving averages aren't the only support and resistance levels, but moving averages can play a role of support and resistance. So now that it's above all of the moving averages, and when I say moving average, I'm talking about these lines here. This red line going up, this purple line going up, which is the strongest moving average, is the 200-day moving average. So if you look, when I say support, look at over here where these wicks came down to the 200-day moving average, over here where it came down to the 200-day moving average. So it's a strong, when I say support, it's support is where it comes to a level to like hold it up. So we go back, you can see that the 200-day moving average is a strong level of support. And you can also see when it's sloped down, the stock market is going down, or the stock is going down. And now that it's sloped up, the stock market is going up. So you can use the 200-day moving average to let you know what direction the stock market is trending, right? So I like Google because we are above the moving averages. On top of that, the RSI right here, this indicator down here, the RSI is crossing above about to cross above that middle line of the Bollinger Band. So when the RSI crosses above or below that middle line of the Bollinger Band, it's a bullish signal. So let me give you all examples for context. So let's see, we crossed that line right here going up. And as you can see, the stock market was going up after that. We crossed that line right here in the middle going down. As you can see, the stock market has been going down after that. So it's a good indicator when you have the Bollinger Band on your RSI to let you know what direction you feel like the stock should go. And we're literally right at that middle line. If you can see the middle line in between these two, the top red line and the green line, the Bollinger Band on the RSI, it's about to go up above that middle line. And I hope y'all can see my mouse. You know what I'm saying? That way I could give you better examples, but it's about to go up. So that's one thing. The other reason why I like Google is because it looked like it's making a bull flag. So I'm gonna show y'all the bull flag pattern so y'all could see. You know what I'm saying? Look at it yourself and let me know if you feel like this is a bull flag pattern. But you read the stock from left to right. So if you're looking at this last little pattern right here, it's giving me bull flag energy. So let's pull up a bull flag and we'll see. All right, so hold on. Wrong one, my bad. All right, so I'm gonna pull up the bull flag for y'all real quick. All right, so this is the bull flag. The bull flag is after a long uptrend, you get a little form of consolidation, almost like it's creating a W. And then after it breaks the high of that consolidation, that is when it is considered a bull flag. So when you see a bull flag presenting itself, it's not considered a confirmed bull flag until it breaks that top line of the consolidation period. So if we go back to Google, it's not a bull flag yet. I wouldn't consider this a bull flag. I wouldn't consider this a bull flag until, let's say, right here. So like 167.8, I would even consider it at 167.5 is probably where you could buy the contract at. So hold on, let me pull that up so y'all can see. So this green line that I put in the chart, that's where you would consider Google to be a bull flag, right up here at like 167.48. So at like 167.5 is probably the contract that you could get into that play. But Google is above the 200-day moving average, so it's trending in the upward direction. We look like we got a bull flag. Plus, the RSI is crossing the middle line of the Bollinger Band, and the stochastic, which is the bottom indicator down here. Let me make it larger and smaller. This is the stochastic oscillator, and as you can see, when these lines cross each other, this blue and orange one, when they cross each other, it shows a direction of the stock. So, for example, you come down here and you see they crossed. The blue one was below it, the orange one, then they crossed, and now the blue one is above the orange one. And you can see as soon as they crossed, that's where the stock started to go up. So according to the stochastic, the blue one has already crossed the orange one. That's also showing that Google is going to go in the upward direction. So it's above the moving averages, it's showing a bull flag, and the indicators are confirming that Google is expected to go in the upward direction. So I expect this swing trade, you know what I'm saying, to probably be profitable within a day or two of holding it. But of course, the longer that you hold a swing trade is the more confidence you can have in your profitability. So if you hold a swing trade for, 3 weeks, it's a better chance of being profitable. If you hold it for 6 to 8 months, you almost guarantee profit at that point. But on this channel, when I do swing trades, it's literally something that I expect, if not the next day, the day after, to make a move favorable in that direction. So I feel like Google is a good play for next week. Um, let me pull up the next one for y'all. And that's, hold on. We pull up next swing trade possibility. Now this one I'm not too sure about because I didn't look at their bank account, so I don't know like how profitable Target is, but I'm looking at Target as a swing trade prospect. You know what I'm saying? This is really just something I'm not as confident in Target as I am Google. This is something more for like trading education, something to look out for, something that will possibly hit next week. But if you're looking at Target, we look like we're starting a triple bottom, right? So I'm gonna show y'all an example of a triple bottom in a second. We look like we're forming a triple bottom. On top of that, the stochastic, this indicator down here, the blue line has finally crossed back above the orange line. And like I showed y'all before, when those lines cross, the stock changed directions. And the stochastic is like the fastest indicator that will give you a signal like right away. Like, you know what I'm saying? This one here in the middle, my MACD, that one is delayed. But if you look at it, I like it because it's easier to understand. It changes from green to red. So if you want to trade based off of that, if it's green right here, you get in until it turns red. You could always trade like that. I don't recommend it. You know what I'm saying? That's just trading off an indicator alone is not a good idea for real. But going back to the stochastic, as soon as this blue line right here crossed above the orange line, you see the stock made an upward motion, right? So the blue line crossed above the orange line, which means looks like we're trending upward. But on top of that, if you look, let me show y'all this horizontal line. So if you look at this, we hit a level of support, right? Because, probably 2 weeks ago, this same exact level was touched. So it looked like Target is making a reversal to go back to the upside. Now, let me show y'all the triple bottom just to make sure if y'all don't know that pattern. So the triple bottom. Y'all gonna love this last one. This last one is guaranteed to hit. All right. So let me pull up the triple bottom for y'all real quick. So the triple bottom is not a confirmed pattern. The triple bottom is literally like a double bottom. It's a chart pattern where it is literally making like a W. You know what I'm saying? But the triple bottom is making an additional leg or side of the W. You don't consider it a triple bottom until the price moves from it goes higher than this level right here. If you could see this one in the middle with the purple. So it has to break the high of where it's been making the top, you know what I'm saying, of that area or whatever. So if we go back to Target, if you wanted to trade this as a triple bottom, really, you wouldn't. Hold on. So if you wanted to trade this as a triple bottom, you would probably wait until it broke this level. What's going on? You probably wait for it to break that level right there to consider it a triple bottom. Now, if you really wanted to be safe, you know what I'm saying, you could wait until it breaks this level right here. But we got a potential triple bottom in Target. It honestly could probably be a swing trade for next week, but I wouldn't actually swing trade this next week. And I think, you know what I'm saying, I think it's a good swing trade, but oh my bad, I gotta pull up the chart so y'all can see where I was talking about with the triple bottom. All right, so going back to it, so these green lines, the green line down here at the bottom. Let me move this so I don't confuse nobody. But these two green lines up here is where you would confirm the triple bottom if you wanted to get into target, right? Target, I think, will be a good swing trade for next week, but this is more like, you know what I'm saying? Just pay attention to it and see. I feel more confident about Google. All right, so I got one more. If you stayed this long, um, well, actually, I got two more. I got two more. Um, so another one I like is Amazon. All right, and I like Amazon for a couple reasons. So with Amazon, let me make sure I'm sharing my screen so y'all can see. So with Amazon, I see a couple things. The All of the indicators are showing me that Amazon is looking good for the swing. Um, the RSI, those lines are crossing. The MACD, that one is pretty close to turning green, and the stochastic down here, as you can see, the blue line already crossed the orange line. So I feel like Amazon, based on the indicators plus the moving averages, are sloped in the upward direction. I feel like Amazon will go with the trend, and the indicators are confirming that. But I do see two little patterns that Amazon looks like is Amazon look like it's doing right now. Um, so I'm gonna show y'all. We look like we got a cup and handle in play. So let me show y'all the cup and handle. Y'all tell me how y'all feel about Amazon doing a cup and handle. So this is a cup and handle. The chart pattern is literally making like a U form and then a little handle before going upwards, right? And of course, it's not always going to look pretty. Sometimes your cup and handle is not going to be like, as you can see over here, this third example, the one in the middle, as you can see, that cup is not a perfect cup. So, you know what I'm saying? Usually you want your patterns to look as perfect as possible, but it's not always going to look perfect. Um, so Amazon looks like it's giving me a cup and handle. Um, it's look like it's giving me a cup and handle. It's above the moving averages, and all of the indicators are showing me that Amazon is gonna be a good swing trade for next week. Let's go back to Amazon so we can show y'all. So I like a couple stocks. I like a couple stocks this week. Next week we gonna go over each one of these and see how they play out. But I got one more for y'all, and this is my favorite. This one, you know what I'm saying? This one is good enough for me to actually put some money behind, like, you know what I'm saying, with like no question about it. All right. Let me just make sure that I'm sharing my screen. So McDonald's. McDonald's is the A plus swing trade for next week, right? McDonald's is the A plus swing trade for next week. Let me break this down to you. All right, so y'all know I like the Bollinger Band on my RSI. If you notice down here, McDonald's is way outside of the Bollinger Band, extremely oversold. Way outside of the Bollinger Band. On top of that, the stochastic oscillator, which is this one down here, is very oversold. It's below it's below the bottom line for oversold. So the indicators alone are telling me that McDonald's is a good buy. Plus, we're down here at the bottom of the Bollinger Band. So I also like my most favorite thing to swing trade is a divergence, right? And a divergence is when the stock is making higher lows and the indicator is making lower lows, right? That's a divergence. So when you have the indicator oversold, also showing a divergence, and we're way like at the bottom of the Bollinger Band. You know what I'm saying? That's where you get that. That's where you get that perfect setup. When you got all of these things, you know what I'm saying? All of these things. Let me hold on. When you got all of these things hitting at the same time, lower lows on the indicator, higher lows on the stock, right? That's a divergence. So let me pull that up so y'all understand what a divergence looks like. Now, if you follow me usually on Stock Sundays, you understand. But you know what I'm saying, for anybody that's new, let me show you what a divergence is. So I mean, McDonald's is like perfect. You know what I'm saying? I would almost blindly swing trade McDonald's next week. But with the divergence, as you can see here, you got either like a price making a lower low and the indicator making a higher low, or you got the price making a higher low and the indicator making lower lows. So literally, you're looking at the lower end of the divergence for bullish divergence. And for bearish divergence, I don't pay attention to bearish divergence because I don't swing trade the stock market to go down. I only swing trade in upward direction. I day trade if the stock market is going down or up, but I only swing trade in the upward direction. So for my divergences, I'm only looking for the stock to make higher lows and the indicator to make lower lows. As you can see, McDonald's is doing a divergence, right? Let's pull that back up. McDonald's is making a divergence. If you follow me on Swing Trade Sunday and these any other weeks, you know that my divergence plays be hitting. Right. So McDonald's is an easy go. And that's the best swing trade setup that I got for this week. McDonald's is a perfect play for next week. Outside of that, I got a potential swing. Now this one is risky. Really if you just want to bet, you know what I'm saying? If you got a little extra money to risk, I would consider and I never recommend for anybody to swing trade based off of earnings, right? But AMD is reporting earnings Tuesday evening after the market closed. I feel like if you were to get in a trade Tuesday evening before the market closed, you could probably make big profit off of AMD. One, because AMD is expected to beat earnings, but if I'm also looking at the chart, right? So if you look at the chart, AMD is what's that pattern? I don't forgot what that pattern is. But it's basically an upside down bull flag. So in this channel, I talk about the bull flag or whatever. I want to say, is that the descending triangle? I done drew the drew the pattern, and I don't even really remember what. It looked like it could be the descending triangle, but that's not really the pattern that but let me pull up descending triangle so you could at least see that. So this is the descending triangle, and a descending triangle is basically like, it's coming on a downtrend, and then it consolidates, and then it breaks out, going in the or you got ascending and descending. It's one of them, but it's basically after a downtrend, it's expected to make a nice reversal, right? So AMD, I see that pattern. Um, and if anybody watch this and want to put the pattern that AMD showing in the chat or whatever. But so based on the pattern, it looks like AMD is going up in the upward direction. Okay. Then we got AMD is expected to beat earnings and their earnings estimate is, is pretty high. So if they do, that would be, what I'm saying, even better. Looking at the indicators, this blue line finally crossed above the orange on the stochastic. The on the MACD, this indicator right here, it looked like it's about to turn green, and in the RSI looks like it's about to go above that middle line. So if you wanted to make real big profits next week and swing trade off of earnings, which I'm not recommending anybody swing trade off of earnings, it is very risky, but it is a good way to maximize your profit and make a week's worth of your day trading in one day. So not really gonna tell y'all which one of these swing trades I'm gonna do for next week. The best one out of all of these looks like McDonald's. But next week we gonna go back over these that I went over with y'all today, and I'm gonna give y'all the plays for next week like I always do. And I'll also let you know which one which swing trade play that I did last week. So y'all got y'all plays, man. Get out here and get this money. I'm Mike the Money Motivator. Y'all like and subscribe.